Thursday, February 27th. Thank you again for joining in to our weekly webinars. You know, I feel like we've come such a long way from the very first webinar back in, oh, what was it, October, August, heck, I don't even remember. But I know that, you know, we've been doing these every week consistently, and it's surprisingly, or surprising to me that every week we still have new things to talk about. So without further delay, I will jump right into it. Again, just as a reminder, if you want to ask a question during the open forum, you can do it two ways. You can raise your hand by clicking on the little hand icon on the control panel to the right of your screen, or you can type in your question under the Questions tab, again on the control panel to the right of your screen. So let's jump right into it. As far as follow-up on some of the issues and questions that we had, and we were waiting for clarification, the very first one was, what happens if somebody does not have insurance essentially by 3/1? What would have happened if they didn't have the insurance? Because again, as we all know, the law says that there would be no penalty assessed if coverage was not in place for a period of less than 90 days, which to me made, and it was verified, that means that coverage had to be obtained by 3/1. However, thank you to Bob for doing some work on this, and also confirmation from NAHU was received, and it's very surprising that the answer was in a place that nobody would even guess, on healthcare.gov. So you can see that the statement says that if you enroll by March 31st, and you won't have to make the individual shared responsibility payment. It goes on to say that, for example, if you enroll in a marketplace plan on March 31st, your coverage begins May 1st, any of the previous months of 2014. So that answers that question. The next clarification that we're going to a flat delay, it goes on to say employers with 50 to 99 employees who do not comply with the mandate will not be penalized until the year 2016. The penalty for employers with 100 or more employees who do not offer coverage will still be subject to the employer mandate and the taxes, the fines, in 2015. However, a change is that previously they had to cover 95% of the full-time employees, and that was bumped back down to 70%. Again, that starts 2015 for groups of 100 or more. So the big question was, what do they mean by the employee count? Are they talking about full-time equivalents, or are they talking about the actual count of the average number of total employees? And it was confirmed that when they talk 50 to 99 or 100 plus, they're specifically talking about full-time equivalents. So I hope that clarifies things for some of you. I know it did for me as well. Another issue is, as we're coming to the close of the initial annual enrollment period on March 31st, you know, I'm getting a lot of questions about what happens after that. You know, what happens to somebody that loses coverage April 15th or June 1st, or an employer dissolves coverage 7/1, or an individual health plan that was written prior to 2014 comes up for their first renewal, and it happens to be after 3/31. And on healthcare.gov, there's actually clarification on what a qualifying event is, and this has been included in our HCR weekly newsletter. But there was a segment in here that really had me nervous, and obviously part 4, loss of eligibility for Medicaid or CHIP, expiration of COBRA coverage, or a health plan being decertified. That is pretty standard language, and that really hasn't changed for qualifying events even previous to the PPACA implementation. The second of minimum essential coverage, and it talks about the types of coverage and individual needs, these job-based coverage. We have a lot of plans written by particular carriers that are coming up for renewal mid-year this year. So what does that mean? And basically what I found out and confirmed is that if you have a plan that renews outside of the election period of 3/31, if non-PPACA coverage is not offered, in other words, if they can't renew on the same plan that they have now, then and have no choice but going to a PPACA option, then that is definitely a qualifying event and throws them into a special election period, which means that they can apply after 3/31, no questions asked. So I wanted to, I thought that was, it certainly kept me up at night. So I thought it was, so talk about something that I'm investigating right now, and it's kind of a new buzzword. It's part of the FSA portion of a Section 125, and the buzzword is NESP, and that stands for Non-Employer Sponsored Premium Reimbursement Plan. Now, as we all know, HHS back in late September of 2013, issued rulings on what an employer can and can't do in a tax-deferred sort of vehicle in paying for employees' premiums. And what this non-employer sponsored premium reimbursement plan seems to indicate is that for non-FFM coverage, that this tax-deferred or pre-taxed shelter could actually pay for individual premiums. I did check it out from our partner and a source that I trust implicitly, and they said no, it's still not something that can be done. So I just wanted to at least throw it out there so that you're aware that there is this non-employer sponsored premium reimbursement plan, part of the FSA, that is being thrown around. I'm actually meeting with some people mid-March, and I'm going to get more information on it to see if it's something that we are comfortable in offering, and if it meets the guidelines of the HHS rulings that came out in September, October of last year. So, more to follow on that. And this next bullet point, FFM challenges still persist. That shouldn't surprise any of you. The same issues with the child above 19 that files their own taxes that, according to the law, are eligible to make application under the parent's plan, the same, family deductible, etc. There is still a glitch in the FFM system that doesn't allow these children to stay on the same plan with their parents. So CMS actually just issued a PowerPoint that kind of goes through some of the enrollment issues, and it's throwing this out, about your child being able to choose their own plan and how to do that as if it's a positive. And from my perspective, it's not a positive. That child has a separate deductible, separate out-of-pocket to meet, and as we all know, most of the time parents will be paying for those claims anyway. So it really puts a lot more burden on a family until they get that fixed. So I just wanted to let you know that those challenges still persist. Some of the other challenges and new wording and new questions on the FFM are all about qualifying events and affordability of group coverage. So when you are enrolling, just be mindful of how you answer those questions. Specifically on the qualifying events, if you are losing coverage on 4/1, you have to be mindful of putting in the correct date, which you really are losing coverage 3/31. So again, just be mindful of how those questions are being asked asked and answered, because it really would make a difference in the effective date that your clients get and when they actually can make application. So more to follow on that. I wanted to also talk to you about, this is not a bullet point, but one that I'm going to throw out to you. We are actually working on enrollment services for those of you that are just throwing in the towel and say, listen, I can handle off FFM individual enrollment, but on FFM it's taking too much time, too much energy. We are working on some enrollment services that you could, a couple different options of just referring those people or handing those people over to us to handle. And again, there are different options where you either pay us a fee or we pay you a fee depending on the options that you choose. So we're hoping to roll this out next week, so watch for details on that. Because the cutoff dates are coming up, March 1st is on Saturday. March 15th is the cutoff for a 4/1 effective date, and then March 16th through 31st is the cutoff and end of the initial annual enrollment period, barring any unforeseen delay or extension on that from the administration. But because of that, and because March 15th is a Saturday, we are going to extend our hours on Friday, March 14th. We will be working 8 to 4:30 normal hours as opposed to our Friday schedule of 8 to 1. So we will be here to assist you for the 315 non-FFM enrollment, those last-minute changes, how we always get those. And for Friday, March 14th, we would need to have the application submitted to us no later than 2:30 on Friday the 14th. So just be mindful of that. Additionally, because March 31st falls on a Monday, on Friday, March 28th, we will also be working 8 to 4:30, and applications that are sent over should be received by 3 p.m. on March 28th, which is a Friday. On March 31st, which is Monday, we are working 8 to 4:30, of course. We need those applications no later than 2 o'clock on Monday, March 31st. So all of this information is going to be in the Healthcare Reform newsletter, just as a reminder. But I wanted to at least let you know ahead of time that we will have extended hours, so no need to stress out too much, I guess. A reminder about our Highmark Blue Shield webinar that we have coming up on Wednesday, March 12th at 10:30. We're going to be really talking about a lot of good things with Highmark. Some of the topics that I've asked Jerry Ann to cover would be the enhanced network versus the broad Highmark network and what that means for the Community Blue programs and the services outside of the enhanced network area. I wanted her to talk a little bit about what the biggest selling plans are so far, what the proper billing procedure and protocol is for both inside and outside the exchange. We get a lot of questions, should I send a check or shouldn't I? Also, how to add and delete dependents, both inside and outside the exchange for Highmark programs, how to change plans inside and outside the exchange if somebody has a plan that they don't care for. Also, any update on their BOR form for any policies that you submitted in the FFM that you didn't get credit for. And then also going through the prescription benefit, the comprehensive versus the progressive commission or prescription schedule. I'm going to talk a little bit about that. And then also I've asked her to give any insight on what's going to happen upon the renewal for PPACA plans inside and outside the exchange for the 1/1/15 sales and renewals. So we're going to do that as well. So definitely worth logging in. And I do have 2 submitted questions. One comes from Britt, and it's a bit of a multi-layered question. And he's talking about dental options for individuals through the FFM, and the plan, are the plans better or worse than the United Concordia individual dental option that we have now. I know that there are a lot of carriers out there. Capital's Dominion Dental program is really good. That's been a very popular seller both in and outside of the exchange. United Concordia has a nice option as well. Outside the exchange, you have the ability to buy a plan without pediatric dental. If you have children, of course, under 19, pediatric dental is required. So, there are different plans available. And I would say it's really, the pricing is very similar inside and out. The plan designs are very similar. It's really just about what meets the needs of your client. I can tell you that, pediatric dental is definitely one of the essential health benefits, and there's been a lot of questions on what happens if I sell a plan on the FFM or outside the FFM that doesn't have the pediatric dental embedded into their plans. Will I be penalized? And it does seem that enforcement of that pediatric dental is probably not going to be something that the IRS or HHS is going to pursue. However, no regulations really have been released on that. You don't have to purchase dental at the same time you're purchasing individual health, both on and off the exchange, and certainly not on the exchange. You can purchase dental outside the exchange, even if you are applying for health coverage inside the exchange. So there are, Britt goes on to ask about the carriers and who has the embedded dental. Geisinger does not have the embedded dental. NEPA does, Highmark does. So Capital does on some of their plans inside the exchange. So again, you just have to kind of be mindful of the plan design, look at those SBCs, or contact your case manager just to make sure that the dental is either included or that you have an opportunity to talk to your client about the dental. And then Sue asks a question. She says, have others who have informed their clients to mail in verification of eligibility to the marketplace, or who had to mail in verification of identity to the marketplace, had trouble with the marketplace actually receiving and posting the information so that it shows in their client's marketplace files? And the answer to that is yes. There is a way to upload it. And what I've been told is the upload, once you upload it, if you can upload it, it takes approximately 2 weeks for the FFM to even recognize that it's there. So yes, there are issues with that, and unfortunately, there's really no one that you can fax it to or email it to. It just seems to be a real issue, obviously, and at this point, I have no advice on how to resolve that other than to try to upload it and cross your fingers. Isn't that funny? That's the advice I'm giving you. Let's roll the dice and see how we all make out, right? So those are the submitted questions that we had for this week. I'm going to open it up now for questions submitted. And pardon me. The first one comes from Maria, and she's talking about a person that is on an employer group. They have 45 people in the group, and he said it's too expensive. He wants to enroll in May in the group cover, or he can enroll in May in the group coverage, but through the ACA, his premium is only $138 for a bronze plan. If he currently has coverage now and opts out, then, and even when it's offered and he opts out, the only way he can go to the exchange and get a subsidy is if that group plan does not meet the affordability factor, which means that no more than 9.5% of the W-2 income can be, for the single-only premium, can be passed on to the employee only. I know it gets confusing, but Maria, I will give you a call and we can discuss the specifics. Britt says healthcare.gov is starting to give consumers trouble again, and the phone-in apps are working well. Thanks, Britt. That's good to know. I appreciate that. I know that as far as quoting, Lehigh County and northeastern PA seems to be down for whatever reason as far as quoting. So just be mindful of that. Scott says, in what filing year will the tax penalty apply? And it is for 2014, Scott. So anything that, any tax penalty for not having insurance would start for 2014 and would be assessed when you file for 2014 in 15. Hope that makes sense, by April of 2015. Jessica says, if they enroll in the marketplace by 3/31, they do not have to pay a penalty. Is that only if they enroll on marketplace? And if they enroll off marketplace, do they still have to pay a penalty? And the answer to that is yes. The individual mandates and the carriers' cutoff dates and penalty dates, of course, are adhering to the SFM schedule. So the answer is yes. Whether somebody wants to apply on or off, if they don't have coverage and make application by 3/31, then they have a penalty. Bob says that he's completed the marketplace enrollment on he completed a marketplace enrollment online on 2/25. The FFM screen showed coverage beginning on 3/1. Shouldn't it be 4/1? Could it be the date the app was started? It could be the date the app was started, but you know what, Bob? I'm going to have to check into that. You're right, it should be 4/1, and I'm not sure why they're doing that. There was some quirkiness last week with the effective dates when they did their update, so it could be based on that, but we'll have to check into it. And Greg says, what would happen if all agents would refuse to participate in the ACA and all enrollments had to go through the exchange and non-working website? Well, I'm not quite sure what would happen, Greg. They would get upset if they had to deal with healthcare.gov on their own. You know, it's definitely a choice that you can make, but I would say that not many are going to make that because it is an opportunity. Jim asks, if a renewal comes up for an older plan after 3/31, can I offer the client a better price plan at healthcare.gov or direct to Highmark? Currently, Health America is putting my clients on a plan that is more costly when often they could get lower costs at healthcare.gov. And the answer, Jim, is absolutely. When, as you mentioned, your Health America One client comes up for renewal after 3/31, that's a qualifying event. They don't have to take the Health America PPACA option. They can terminate their Health America One plan if they choose to and look for other options that they feel better suit them. So absolutely they can do that on or off exchange at that time they come up for renewal. Bill says, when enrolling through the website, has anyone experienced the question that asks how many hours per week do each of the enrollees work? The boxes are gray and won't allow it to input a response, nor will it allow you to proceed. That's a good question, Bill. I've not experienced that question yet. So is that specific to SHOP? If it is, then the SHOP portion of healthcare.gov does not work yet. If you want a quote, an accurate quote, or to enroll on a SHOP plan for a group, you can contact John Reel for quotes, and that may be why the boxes are gray. Don says Dominion URL represents info on URL website. It is the Cap Blue Cross coverage, Don. So if you want information on that individual dental, go to Health Plan Options under Product Information and under Capital Blue Cross. Glenn asks, if a person enrolls in a plan, then drops the plan by voluntary means, is the person's status no insurance and subject to fines or penalty? And yes, if they are uninsured, if they're insured and then drop the plan, then they're going to be subject to the penalty for the months that they don't have insurance prorated, you know, after that voluntary termination. And typically what I'm understanding about how the fines will be assessed is that when somebody has a tax return and there's a penalty, then they would pull that penalty right out of any estimated or calculated tax return. So that's how it's going to be grabbed, and the penalty as well. So it appears that is the end of my questions for today. If anyone else has any, just let me know. Type them in. And just a reminder, next webinar is Thursday, March 6th at 9:30. Again, I thank you very much for participating weekly in these webinars. Again, as we move forward, we're going to be starting to talk more strategy about how to capture those renewals outside of the annual election period. For now, thank you again for joining in. Have a great day, have a great Friday, and have a wonderful weekend. Bye-bye.